What if your financial future hinged on just a few key insights?
That's right. Join top analysts like George Gammon, Stephan, and David Lin as they decode market movements.
Using AI-driven summaries, you'll uncover vital perspectives on the US dollar, gold's rising appeal, and the housing market, all in a fraction of the time.
So get ready. Let's kick things off with George Gammon's take on the dollar's challenges.
Stay tuned for Graham's insights on gold and how to safeguard your investments. Today, we're going to analyze insights from George Gammon regarding the future of the US dollar.
George examines the implications of recent market volatility on the dollar.
George argues that despite predictions of the dollar's fall, strong fundamentals support its ongoing strength.
He emphasizes that historical precedents show the dollar maintaining its critical role.
How does Gammon assess global challenges affecting the dollar? He highlights how crises historically impact dollar valuation.
George connects the dollar's value to global demand and geopolitical conditions.
What does George say about supply dynamics? He notes that changes in demand can have immediate impacts on dollar supply.
He calls for closer analysis of both supply and demand factors affecting the dollar.
What levels should investors focus on? Falling below 90 on the DXY could indicate trouble.
Conversely, a recovery towards 100 may suggest a resilient dollar.
What does George predict for the dollar's trajectory? He suggests a possible rebound if key economic indicators stabilize.
However, he cautions about the implications of prolonged declines below 90.
George concludes that investors should remain alert to the economic indicators that impact the dollar.
Ultimately, understanding these indicators is crucial for making informed decisions regarding dollar investments.
Welcome to today's discussion as we delve into Stephan's take on the promising outlook for gold prices amidst concerns about a declining US dollar.
Graham highlights that while the dollar faces challenges, gold has surged nearly 30% this year, reinforcing its status as a reliable asset.
Graham emphasizes that despite the strong performance of stocks historically, gold has become increasingly appealing as inflation fears escalate.
Indeed, he points out that gold's stability during times of turmoil sharply contrasts with the dollar's volatility.
Graham reviews how gold has historically been valued and explains the pivotal moment when the US abandoned the gold standard.
He notes that since then, the purchasing power of the dollar has drastically declined. According to Graham, gold's performance during economic downturns positions it as a preferred asset in volatile markets.
Investors often view gold as a safeguard for preserving wealth in light of concerns over the dollar's future.
Graham discusses analyst forecasts, suggesting that gold may experience significant price rises in the near future, based on various expert opinions.
This anticipated surge is a response to fears regarding dollar stability and inflation rates.
Graham concludes that investors should contemplate including gold for a balanced portfolio to hedge against uncertainty.
He advises against overinvestment in gold but acknowledges its importance during unpredictable economic conditions.
Graham recommends a cautious approach to gold investment, noting its role in diversification.
Staying updated on market trends and gold's performance relative to other assets will inform future investment choices.
Today, we're analyzing the recent predictions from Reventure Consulting, particularly the downgrade by Zillow in their housing market forecasts.
Zillow now anticipates a 1.7% drop in home prices nationally, with a significant 5.2% decline projected for San Francisco.
Reventure Consulting's analysis suggests that the housing market may be entering a correction phase, driven by rising inventory and economic concerns.
According to their review, discouraged buyers fearing job loss and expecting higher unemployment is significantly affecting buyer sentiment.
Reventure Consulting forecasts a 0.4% decline nationally, contrasting with Zillow's more pessimistic outlook.
Interestingly, certain cities like New York are projected to see modest increases, differing from Zillow's predictions.
As we assess the future, we must monitor regions likely to stabilize in affordability for buyers.
Reventure emphasizes the need to understand local market conditions to determine the right timing for purchases.
In conclusion, Reventure Consulting stresses the importance of understanding local market overvaluation.
This knowledge will empower buyers to make informed decisions and seize opportunities when home prices align with income levels.
Welcome back to Trade Brigade's morning session. Today, we'll explore insights shared by Matt on recent fluctuations in the equity markets.
Matt highlights a significant gap up following Tesla's earnings announcement, tied to some relief from political tensions.
Matt discusses the implications of Tesla's earnings report, noting concerns despite the stock's price increase.
He warns traders to be cautious, as sentiment fluctuates rapidly following earnings announcements.
Matt points out that soon-to-be-released PMI data will impact market volatility.
He urges traders to factor in this data when making trading plans, as reactions can be quick and impactful.
The discussion also focused on market internals. Matt explains that strong signals often mean increased buying pressure.
Conversely, he cautions that a narrowing advanced decline line might indicate a momentum shift.
Looking forward, Matt predicts the market might test previous resistance levels due to yesterday's gap.
He advises traders to stay flexible in their strategies based on how the market behaves in the coming days.
In conclusion, Matt emphasizes adjusting trading strategies based on economic data and market sentiment.
He encourages traders to stay vigilant and adaptable in this dynamic trading environment.
Today, we're examining an insightful analysis from Eurodollar University that highlights the significant surge in the Swiss franc and its implications for the global economy.
This surge raises alarms about the potential directions of interest rates and the fragile state of the global economic landscape.
The analysis notes that the rising Swiss franc reflects risk aversion amidst global economic fears.
Indeed, the IMF has downgraded growth projections in Europe and the US, indicating deeper issues in advanced economies.
The analysis suggests that the Swiss franc's surge to a 14-year high shows significant movement towards safer assets.
This resembles past financial crises, where similar trends indicated growing economic instability.
The IMF's report underscores a significant downgrade in global growth expectations, projecting a decline to 2.8% by 2025.
This reflects a broader sentiment of uncertainty across advanced economies, especially in Europe and the United States.
As the Swiss franc strengthens, it's likely the Swiss National Bank may implement negative interest rates.
Such a move would highlight the persistent fragility of the global economy, complicating recovery efforts.
In conclusion, investors and economists should remain alert to currency signals, particularly shifts in the Swiss franc.
Understanding these dynamics can provide critical insights into potential economic trends and investment strategies.
Today, we're breaking down the financial landscape with insights from Luke Groman and Jim Thorne on the challenges the U.S. economy currently faces.
Luke warns that the U.S. dollar's status as a safe haven asset is under threat, while Jim highlights the implications of this shift for global markets.
Luke emphasizes that the ongoing decline in the dollar hints at a looming crisis, with capital fleeing to safer assets.
He warns that if the situation persists, we could witness significant turmoil in financial markets. Jim points out that the U.S. is experiencing a major shift reminiscent of economic events that reshaped the global order.
Both agree that acknowledging these changes is crucial for investors planning their next moves.
Luke discusses innovative concepts like Bitcoin bonds as a way to adapt to rising debt.
Jim concurs, stressing the urgency for new strategies that align with evolving economic realities.
Luke foresees gold prices potentially exceeding historical peaks as economic conditions worsen.
Jim agrees, indicating that gold could play a pivotal role in protecting assets during turbulent times.
Both Luke and Jim underscore the importance of preparation as economic signs point towards potential crisis.
They advocate for dynamic investment strategies that can adapt to rapidly changing conditions, urging viewers to remain informed and vigilant.
What an eye-opening discussion we had today.
Absolutely. Luke Groman and Jim Thorne raised some critical points about the dollar's fading role as a safe haven.
Right? It's alarming how both pointed to different aspects of economic shifts that we need to pay attention to.
And how about the insights from David Lin regarding the Swiss franc? It's a clear signal of a risk-off sentiment.
It shows how complex and interconnected our markets are. But then again, I can't help but feel a bit skeptical about the resilience of the dollar in the face of these pressures.
That's a fair point. George Gammon provided valuable insights on that topic, but it seems there's a clear divide when discussing the immediate impacts.
And let's not forget the looming housing market concerns raised by Reventure Consulting. A correction could shake things up.
Exactly. It's fascinating how rising inventory levels can significantly influence market sentiment.
If you learned something today, make sure to like and subscribe.
Your support means we can keep bringing you this kind of insightful analysis.
Definitely stay tuned for our upcoming videos where we tackle more pressing financial questions. You won't want to miss them.